Okay, hello, good morning, everyone. Happy Monday. Okay, so welcome to our daily currency call. Today it will be just Jean and I. Okay, so before we get started, let me share the disclaimer. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, so with this disclaimer done, all right, it's Monday, right? So we'll be going through Aussie and Kiwi, all right? So what about, fundamental wise, okay? So last Friday, okay, not sure if you guys remember, Governor Low actually did a testimony, all right? And what you're looking at right now is the opening statement of his testimony to the House of Representatives Standing Committee on Economics. Okay, so basically, he pretty much, well, during the opening statement, okay, he pretty much highlighted, that economic recovery in Australia has improved. Okay, and then going on to inflation, he said that despite seeing many countries, okay, other countries having high inflation, okay, in Australia, they too have inflation as well, okay, although the increase here is smaller than in many other countries, okay. Yeah, true, it's, that there's been some, I would say, minor rise in inflation in Australia, okay, but it wasn't as crazy, as hot as the UK and the US, okay. And then what else did he mention? Okay, coming to monetary policy, he highlighted the the discontinuation of EU target in early November, okay, which was really still news, I would say. And then in terms of QE, okay, he underlined that the ending of the bond purchases was made by the three considerations over here, and the RBA has purchased $350 billion worth of bonds, okay, issued by the Australian government and by the states and territories. All right, and okay, with the whole ending of QE bond purchases and things like that, okay, he highlighted that the central bank will not increase interest rates until inflation is sustainably achieved within the 2 to 3% target. Okay. So with the whole ending of QE, okay, the market was actually pretty, I would say, excited and maybe starting to get ahead of themselves. Okay, in terms of rate hike. Okay, so as usual, Governor Low, will always come in and I would say tone down everybody's excitement, the level of excitement, okay? So he mentioned that it is too early, though, to conclude that inflation is sustainably in the target range, okay? In terms, inflation has just reached the midpoint of the target band for the first time in over 7 years, okay? Yeah, due to very large disruptions and things like that, okay? And in terms of interest rate hike, let me see, where is it? Okay, I think he did not mention it explicitly over here, okay, but during the most recent monetary policy meeting, okay, he actually mentioned that, with this end of QE, doesn't necessarily imply that the central bank will be increasing interest rates, okay? So just to tone down the whole excitement and things like that, okay? But here comes I would say something new, okay? So, after this whole reading of this opening statement, okay, there goes the, what do you call that? The whole grilling process, okay, by the House of Representatives, okay? So tons of questions were being asked, to Governor Low, okay? And then, okay, here is the complete transcript, okay? I don't really suggest you guys to read because it's not like close to 30-page long of wordy, like it's like the chairman of the committee asked or maybe like highlighted some situation, and then Governor Low will be answering and things like that. Okay, but I briefly did some browse through, and I actually find out something, okay, that is worth paying attention to. All right, let me just search it up. Just go back. Okay, just go back. Okay, so this is actually on interest rate hike. All right, so where is it? This is actually, so okay, this guy over here, Dr. Lee, actually asked some question to Governor Low. Okay, I'm not so okay. I just read it out. All right. Although I was about to say that I'm not so concerned with what question he's asking. Okay, but here it goes. It's quite a big difference, isn't it? With the market expecting at least 4 rate rises this year, and the bank suggesting that rates will not rise. Okay, so basically, Dr. Lee is trying to get some clarification over here that with the market expecting 4 rate hike in 2022, and then the central bank suggesting that rate hike will not take place. Okay, like the previous meeting when Governor Low said that doesn't mean that QE has ended. The central bank will be considering a rate hike and things like that. So he's seeking this whole clarification over here, and Governor Low's reply is this: we'll just go back one step. We haven't been saying that rates won't rise this year. Okay, at the press club, in response to a question, okay, I said it is plausible that we would raise rates later this year, 2022. Okay, later this year. It will depend upon the data, the evidence, the outcomes of inflation, and the trajectory of inflation. It is certainly plausible that interest rates go up this year, but we are going to see what the evidence tells us. Okay, so the latest how should I put it? The latest view from the central bank, or specifically the central bank's chief, okay, Governor Low himself, all right, is that interest rate hike in 2022 is still possible, is plausible, okay, and it really depends on the outcome of inflation and the trajectory of inflation. Okay, so that's hope. Okay, previously, despite this whole unlikely we are going to see a rate hike in 2022 because wage inflation hasn't been rising fast enough and things like that. And the central bank's only expecting wage inflation to hit the required level in around 2023. Okay, so with the wage inflation being a prerequisite, okay, for a rate hike, we are unlikely going to see an interest rate hike anytime before 2023. Okay, that was the previous, I would say, the previous view that we all get, right? But right now, okay, I guess Governor Low has been pushed to, to answer this whole, to clarify this whole situation that, market is expecting rate hike. And then on one side, the RBA is actually trying to say that, don't expect any rate hike and things like that. Okay, so the clarification that Governor Low is giving us, which is, I would say, the most updated one as of now, okay, is this. Okay, rate hike is still possible in 2022. Okay, but it all really depends on how inflation turns out. Okay, if inflation were to carry on to move higher, hence more sustainable, okay, hence no longer transitory, okay, then we can actually expect interest rates hike probably in the second half of the year, or maybe towards the the fourth quarter of 2022. Okay, so I would say overall this is slight hawkishness coming from the RBA. Okay, although there's a change in tone from time to time, which is why all these speeches or testimony whereby audience questions can be expected will come in very handy, okay, from time to time for the markets to actually understand what the current stance the central bank is taking. Okay, it need not be the RBA, it can be the other central banks as well. Okay, so I would say overall, okay, this testimony it's pretty hawkish, okay, pretty hawkish coming from the RBA, okay. And keep in mind that the RBA will be releasing their minutes, okay, for the most recent meeting, okay, tomorrow at 08:30 GMT plus 8, okay. So what we will be paying attention to, okay, is basically any further details on rate hikes. Okay, now that QE has ended. Okay, so well, if there's going to be any new updates and things like that coming from the RBA in terms of the previous meeting, because remember, all right, they can actually discuss um, anything during the meeting, but it's just not being stated um, in the interest rate statement, okay, which is pretty brief, I would say. And moreover, okay, there wasn't any press conference being held that time. All right, so the market still stand a chance to receive more detailed information, like the one that I've just mentioned, okay, in terms of rate hike, okay, which is why we want to pay attention to it. So any major hints, okay, details dropped by the RBA tomorrow, I'll update you guys again in the ECOFIN chat. All right, and then if not, I will probably go through it next Monday during the currency call when we talk about Aussie and Kiwi again. Okay. Right now, is there any questions? Okay, no questions, right? I will be sharing the link to the testimony, speech, and the transcript later on. All right. And if there's no questions, okay, I would hand it over to Jean right now for his analysis on DXY and the Aussie and Kiwi dollar currency pairs. Over to you, Jean.
Thanks, Jimmy. So I like how Kim Hong has been sharing with you about the RBA and the likelihood that we could see, likelihood that we could see some interest rates increase. I think what is, in my view, what I think would happen is we'll probably see some rate increases, but later into the year. So with that said, just sharing with you the news here. That's not the news, that's the Aussie chart. Just sharing with you the news here. Not a lot of news happening today, so not a lot of activities likely to happen today, but I think that, well, first it's the 14th of Feb, so happy Valentine's Day to everyone out there. But what's overhanging the market right now is the potential or the likelihood or the threat of the Russian invasion into Ukraine. When is it going to happen? Is it going to happen? That's hanging over the markets at this point. But with that overhanging, we do have the RBA monetary policy meeting minutes to be released tomorrow at 8:30, like Kim Hong was telling you about. So pay attention to that. Look out for any hints of rate increases, of likely rate increases. Through the week, we do have some pound news we should tell you about over the next couple of days. We do have the US retail sales number for the US looking like a good jump from a minus 1.9% to a plus 1.8%. Core retail sales looking to go from a minus 2.3 to a 1%. So in terms of retail sales number, looking at a big reverse from negative to a positive number. And then we have the FOMC meeting minutes. We do have on Thursday morning, Aussie employment change numbers not looking very good, looking from a 64.8K to flat to a zero. Unemployment rate looking to stay at a 4.2%. So I don't think this is going to be, if it does come out at zero, if it does come out at 4.2%, might not look very good for the Aussie dollar on Thursday. And then following on from that, a lot of news, but not big hard impact hitting news, but a lot of news to be coming from on the rest of the week. So with that, what could we be looking for? Paying attention first to the DXY, we saw that it has bounced off that 95.13 or 95.14 level. Now at 96.03, it's broken past that 95.69 resistance level. What I'm anticipating is possibly further upside towards that 96.51 or 96.50 resistance level. Why I think that's likely to happen? We are seeing some upward move in the US dollar. We are looking at the uncertainty in terms of the Russian invasion, possible Russian invasion. So with all that uncertainty, the move towards US dollar, towards reserve is likely to happen. So we're likely to see that move towards the upside. And also remembering that the FOMC has come out with that plan or with the thought of the rumor or the ideas that they're looking to increase rates multiple times throughout the year. we're possibly going to see that dollar strengthen towards that 96.50 resistance level. What happens at that point? We can cast our eye back to the 27th of Jan, where it broke above and we saw it reach all the way up towards that 97.40 resistance level. Is that going to happen? I think it has to break past this resistance before we get any further clarity of the direction of the DXY. But with that, that actually gives us a lot of trading opportunities. What we could be looking for here on the Aussie dollar H4, oh, no, wait, that's the daily. Aussie dollar on the H4 time frame, we have seen it break below that 71.60 level. We've seen it break below that 71.60 level. What I would be looking for on the Aussie dollar, despite the possible rumor or possible thought that they could be looking to increase rates, I'm looking for short opportunities or selling opportunities back down towards that 70 range. This is quite a big move. This is anticipated to be quite a big move. I think you have many opportunities to keep it quite or to break this up into multiple trades. What you should be looking for is selling opportunities below 7115, selling opportunities below 7115, which is quite soon. Stop loss about 50 pips, take profit about 100. You're looking at a 1:2 risk reward ratio towards the downside. What you could also be looking for is to get out of a trade at about 50 pips. So you could be looking at a 1:1 risk reward ratio, getting out at about 70-60 level, a 1:1. If it does break below that point, then you can see that 1:2 risk reward ratio towards the downside, back towards that 0.7 level support level, a very strong support level. But from that point, we're going to see some major reactions at that support level. So Aussie dollar on the H4 time frame, looking towards the downside, breaking below 7115. You can look for that 50 pip stop loss, 100 pip take profit level, 1:2 or a 1:1 risk reward ratio towards the downside. Why I had the daily time frame as well is I like that price action, that reaction or that rejection of that support level there. Once it breaks below, you can see likely to see quite a good downside even on the daily time frame. And we can see that once it hits that 70 level, that 0.7 level, we see it react quite strongly back in December, bounce back up, back in late Jan, bounce back up as well. So we're looking to see whether this can come down, hit that level, and possibly bounce back up. Quite straightforward on the Aussie dollar H4 time frame in terms of a trade opportunity. With the New Zealand dollar, a little bit harder to trade. Why I say that is because on the H4 time frame, it has already had that big move. It's already right in the middle of that support and resistance level. What you should be looking for on the H4 for the New Zealand dollar will be a bit of a shorter term trade. What I would be looking for on the New Zealand dollar, with no news to be released, no big surprises coming from the New Zealand dollar, anticipating further dollar strength, is a shorter term trade. If it does break below that recent low point, 4th of Feb, at that 65.98 or 66 level, if it does break below, you could be looking for a selling opportunity back down towards 65.40, back down towards 65.40. Keep your stop loss very tight at the maximum of 20 pips. Take profit about 50 pips. You're looking at above 1:2 risk reward ratio, almost 1:2.5 risk reward ratio towards the downside for the New Zealand dollar. But it does need to break below that 66 level. Candle has to close below that point before we see that further downside. With that said about the New Zealand dollar, we did have a trade there where we shared with the Traders Club members. I think that was on the H1 time frame, just to share with you. We're looking at either the upside or the downside opportunities. So, we saw that move both towards the upside and the downside, looking for that trade. So with that on the H4, quite simple for the New Zealand dollar, keep it short term, wait for that break. Aussie dollar looks like it's more likely to happen towards the downside. On the dollar index, looking at further strength, likely further strength for the dollar index. With that said, any questions? Oops. If there's nothing else, I will. Is there anything else on that, Gimme?
Nope, not for now. Yeah, basically just pay attention to the Ukraine-Russian war. I mean, it's well, not war. I hope it's not a war. Okay, because yeah, like I typed in the chat, I think there was a strong sell-off. Okay, on living in the GMT plus 8 time zone. Okay, there was actually a strong sell-off on Saturday morning. Okay, just like 3 or 4 hours before the US market closes. Okay, so yeah, President Biden said that he thinks that Russia may have already made up its mind on invading Ukraine and things like that. Of course, remember, okay, all this is still his thoughts. Okay, it's just still a speculation. So until it really happens, okay, this is just uncertain, at the moment. So because of this, we see a strong sell-off. And I guess because of this issue, okay, if you guys actually look at the chart, some of you may actually be wondering, okay, so why is there a weakening in the US dollar as well, things like that, okay? So yes, the US dollar, the Japanese yen, and the Switzerland francs, okay, they are all safe haven currencies, okay? But in times of serious uncertainties like this, okay, there will be, I would say, a challenge, okay, to see who's the safest of all, okay. But in my point of view, okay, my personal, based on several years of trading and I would say observations, okay, the safest of all currencies, okay, I would say is the Japanese yen, okay, and then followed by the Switzerland francs, and then followed by the US dollar. Okay, so what this means is that during times of uncertainties like right now, okay, we are likely going to see the US dollar weaken against the Japanese yen and the Switzerland francs, okay? And then we are likely going to see the Switzerland francs weaken against the Japanese yen, okay? So Japanese yen being the strongest of all, okay? Just to make things more complicated for you guys in terms of trading, okay, remember that the Bank of Japan has recently announced, okay, unlimited buying of bonds, okay, that literally weakened the Japanese yen, okay. So with this whole potential invasion of Russia into Ukraine, the Japanese yen has become the safest of all currencies. And then, but on the other hand, we have the Bank of Japan, going to, in an attempt to lower bond use, okay, by buying by planning to buy unlimited amount of bonds, that actually weakens the Japanese yen, okay. And then, of course, on the Switzerland side of things, okay, the SNB, Swiss National Banks, they may actually intervene with the market, okay, in terms of foreign exchange, okay, by buying more foreign currencies in order to weaken its Switzerland francs. Okay, so wow, with this whole, USD weakening against the other safe haven currencies, Japanese yen can also weaken against the other safe haven currencies. And if Switzerland francs were to be so strong that the Swiss National Bank were to intervene, causing a further weakening of the Switzerland francs against the other safe haven currencies, there's only one point to highlight over here. Okay, really keep your trade short term. Okay, right now, to be honest with you guys, okay, I've been trading recently, okay, over these headlines, be it the BOJ trying to purchase more bonds, okay, or uncertainty coming in from Russian and Ukraine, or the FOMC being more hawkish than ever and things like that. Okay, but the common denominator among all these trades that I've made is that I kept them very short term. Okay, to the point of scalping. Okay, so if you guys are not into scalping and things like that, at least please keep your trade short term, like intraday. Okay, if you guys would open a trade right now, try to close it as short as within the next market opening session. Okay, like for example, if you guys right now it's the Asia market session. Okay, if you guys would enter a trade, keep it. I would say try to keep it, if possible, keep it until at most until the European session. Okay, if you guys were to enter any trade during the European market session, then try not to hold it past the US session, or at least stay around look at the chart, okay, until the US market opens and see how it reacts, okay? If the move were to continue, okay, say for example, a risk-off move were to continue, US dollar were to continue weakening against the Japanese yen until the European session later on, or even until the US session tonight, okay, then, you know, probably you guys will be more confident in holding on your trades, okay, or, you know, carry out the necessary trade management plan that you guys impose, that you guys have, okay? Like maybe, for example, some of you may actually trail stop losses or things like that. You know, do what you need to do, okay? But just keep in mind, long-term trade right now is you're likely going to suffer, okay? And instead of potential profits can be made, okay? But you guys, instead of making profits, you guys may actually get stuck in a trade because of all these breaking news headlines, you know, out of nowhere and things like that, uncertainties and things like that, okay? So the moral of the story here is keep your trades short term, even if you guys are trading gold as well. Right now, the US dollar is weakening because of the whole Ukraine-Russian issue, okay? Hence, we see a strengthening in gold, okay? Remember, there's a inverse correlation between gold and the US dollar, right? So if you guys are happily trading gold, making a lot of money, yeah, same thing, keep your trade short term. Because when the US dollar were to pick up strength once again, be it because of de-escalation of the tension between Russia and Ukraine, or a more hawkish FOMC and things like that, okay, causing US dollar to strengthen, we are likely going to see the gold weaken against USD once again, okay? So just keep your trade short term, and, you know, any updates and things like that, of course, will be communicating through the Traders Club EcoFin platform, okay? So for now, keep your trade short term, and if there's any questions, you know, post it in the EcoFin platform. Otherwise, we'll be seeing you again tomorrow during our currency call, okay? Take care and trade safe for now. Bye-bye.